Stock market weekly chart review for the week of November 28th through December 2nd. What we're going to be doing is looking at S&P 500 and about 5 different sectors that make up the S&P 500. We're going to use the S&P 500 as a proxy for the overall stock market, because whatever the overall stock market's doing, it has a big impact on an individual stock in the stock market. And whatever these various sectors are doing is going to affect the S&P 500. So it's a way to kind of get an idea of what the overall stock market's doing. Over here at Yahoo Finance, I put in S&P 500, SPY. I went under holdings, and it's showing these sector weightings. And we see that technology makes up the most of the S&P 500 at a little over 23.5, followed by healthcare, which is currently at 15.40%. Then we got financial services at 13.65%. Consumer cyclical at 10.58%. And the last one we'll look at is industrials at 8.68%. I've got different ETFs that correlate with those particular sectors. Technology, XLV healthcare, XLF financials, XLY consumer discretionary, XLI industrials. Normally we look at the S&P 500 first. Today we'll do that last. XLK. Now this is a weekly chart, 2-year time frame, so each one of these candles represents 1 week of trading. And from left to right, it's 2 years. This volume on the bottom, this red line's a 200-day moving average. This purple line's a 20-day moving average, and this green-blue line is a 50-day moving average. And we see this week, for the last 3 weeks, we kind of went sideways. You can see a little bit of the sideways motion. Have this 4 weeks ago, we had this really big upward candle here in technology. And the market's been moving sideways to such a point that you see the 20-day moving average, 20-period moving average, it's not 20 days on a weekly chart, but this 20-period moving average is just evened out to basically flat there. So we're stuck in this trading range. We look to the left, we see the prices have kind of overlapped and got stuck here before. And we see it back here. And it's a bit of this range. It's not necessarily like a certain dollar amount, but a range. And we see it going back as far as March, kind of getting stuck in there. Between the 50-day moving average and the 200-day moving average, that 20-day moving average, just kind of going sideways. And at the moment, these 3 candles, 3 weekly candles following this big bull candle, they're still trading in the upper part of this range, which is a sign that prices are keep pushing to the top. Now this is acting as resistance right in here around that 135. So if it's not going to pierce that 135, then sooner or later it might fall back and down here and test that 200-day moving average. But overall, we see we got some sideways action going on in technology. Healthcare has been on a nice upward trend. We see it put in a bottom here, put in a bottom here, and it's been on this upward trend. This has probably been the strongest sector of the sectors that we look at. We got this bullish candle here, followed by this week's bullish candle. Even though prices traded all the way down here to 135, buying pressure, opened here, traded as low as here, but buying pressure, pushing it up towards the top. Looking to the left, we see we're kind of bumping against this resistance point, even though it got higher up here, but we're in that range where it starts getting starts pulling some resistance. We got a high, higher high, higher high, but since then it hasn't made a higher high. It's just made lows, lowers. It's just made lower highs. We'll see if that's going to change here above all those moving averages. And I would guess that this week it would be very likely to me if we are going to move up a couple bucks and test this 142 area. That's what I'm thinking of healthcare. So we got one sector moving sideways, one sector moving up. Financials, quick look here. I'm seeing sideways for the last couple weeks, right? And you see this line that kind of like a line, right? Here is a top. Here's I know touched up here that it actually closed down here. So nonetheless, we see it opened here. So it's like basically this line here at the 35, 30, maybe that's a $36 mark being covered up by that last price that it closed at. But it seems like it's not really having an easy time getting above 36 and staying above 36, even though it went above 36 here, went above 36 here, but not staying above 36. Looking to the left, we see prices got stuck in here before. We see an overlap of prices in here before. We see it over here, touching this area. But we are above all three moving averages. And we got a bottom here, a little bit of a lower bottom, but you got these double bottoms, kind of like a W pattern here. And it has been moving up, but getting stuck in this $35 range. So for the last 3 weeks, it's basically been moving sideways. We'll say 4 weeks actually. And I know it shot up here, but since then, 1, 2, 3, 4, it's stuck in that area, which we shouldn't be surprised, right? Touched here before, not doing it. So this one kind of moving sideways also. Not sideways enough like the technology was, because we got kind of a downward, we got an upward slant to our 20-day moving average. Consumer discretionary. Now this one is just lagging behind as far as overcoming any moving averages. It's been below the 200-day moving average, got below the 200-day moving average over here, rallied up, touched that 50-day moving average, and I know I keep calling it 50-day. It's not a 50-day, 50 period moving average, and crashed down below the 200 moving average, and just going sideways, bouncing below that 200-day period moving average. XLI Industrials, pretty strong uptrend, even though we seem to be kind of petering out of momentum, where after this big bullish candle, we had sideways, higher candle. This one though, look at how it traded all the way down below this, which is in a way it's a bullish sign that selling pressure pushed it all the way down here, testing that whatever it is, 90 something, and buying pressure pushed it up here. So we see it's not surprising that it got kind of stuck in this area, right? We saw it here before. There was a reversal here. Over here, lots of times stuck in that area. Over here, stuck in that area, and going back as far as here, a little bit lower in the $95 area, or somewhere 95 to 100. Does that prices kind of started acting funny in there? But I wouldn't be surprised if this week we're gonna be touching up here. Seems like it will get at least $2 more, but there's ends up being a lot of resistance up here around the 106 area. SPY. So we had sideways, up, a little bit of sideways, but in below the 200-day moving average, and up. So not too surprising that we're seeing not a strong up movement in the S&P 500, but up kind of a sort of a sideways up movement, right? Because look at how the prices keep overlapping. Whereas here, look at in here, look at how they're just going up, right? More, it's like a strong part to the up. Yeah, a little bit of sideways right in there. But real choppy. Getting looks like it got up to that 407, tested that 407, but pulled back. Not surprisingly, we had a reversal around here. We see here it touched before, couldn't really break that, and obviously broke it here, but failed. And 407, where's that 407? Now look at that, had to gap up from there. Kind of prices getting caught up in that. That looks like it's more about 390. All in this area. It's kind of real sticky in the price points. So I think in this week, this next coming week, I think we're going to be testing this 50-day moving average, possibly even breaking out above it. And we'll go to chart. So here, basically the end of 2021, beginning of 2022, we started this downward trend. And we're out of this downward trend right now, but we want to see if it's going to stay out. We're back into December. We passed Thanksgiving, moving into Christmas, moving into New Year's. There's going to be light volume, and there's a lot of societal sentiment and monetary sentiment to have the stock market up. And on light volume, it's easier to move stocks around up or down depending on what you want. And since there's a lot of factors in society that benefit from a higher stock price, I think that we're going to see prices moving higher through Christmas, through the holidays. And also there's a real phenomena called the I don't really know if it's a phenomenon, but there's this thing called the Santa Claus rally that usually, like the last week before Christmas or whatever, you see prices go up. And looking at the line chart, we seem to be experiencing some of that, even though some things are going sideways. Overall, you know, we're not we're out of this channel. Now, there's only three directions the stock market can go. It can go up, it can go down, and it can go sideways. So we're not in a super strong at the moment, right? Now things could change. They being the government and the Federal Reserve and people that control monetary and fiscal policy, they could rig things up to goose the market up to the top. But right now that's not happening. So aside from that happening, there's talks of slower rate hikes, so that's kind of helping push stuff up. What will be really interesting to see what's going to happen after the holidays are done if there's not any type of program by the Federal Reserve or the Treasury or anything like that. If it's just left with people trading and the plunger team, what will happen? Will it stay out of this? Will it stay out of this this channel here? I think it might. I'm not really making any strong bets either way, but I think it's possible. I think it's possible that we might see it kind of grinding sideways, not really like shooting up like this, but maybe a sideways grind. And it's also possible it could fall back into this. I think maybe for me, if I had to put an order of what I think might happen based on the information I have today, I think a sideways grind. After that, I think maybe drop back down into a bear market. And if there's no programs coming out from the Federal Reserve or the Treasury or anything, then I don't see a strong bull market like this. What puts me in a good position that kind of feel good no matter what's happening is I sell a lot of cash secured put options on stocks that I don't mind owning the rest of my life. Now I know if the stock market drops, I could get these stocks better at a better price, but I'm still going to buy them kind of at any price because I'm just cash flowing these stocks. And if you want to learn more about that, it's a pretty easy strategy. It takes a little bit of getting your mind wrapped around it, of learning new jargon terms and things like this. But once you get your mind wrapped around it, it doesn't take much time. It's not something you really got to spend a whole lot of time managing unless you want to. And one of the best things about it is that, options, if you don't already know, options have expiration dates. Like your car insurance, it has an expiration date. Like milk, it has an expiration date. And, unlike milk, at the end of your expiration date, the milk, if you haven't drank it, it's bad. With options, when you're selling cash secured put options on stocks you don't mind owning, at the end of expiration, there's no bad outcome. You keep premium, or you keep premium and you buy an asset at a price that you're happy with. It's really fantastic. So check out ihavesuccess.com. Download any of this stuff. About 6 days a week, you'll be sent market relevant data. And as I work on developing new things, you'll get access to those. And most importantly, what I think, in my opinion, most importantly, get a paper trading account. Be in a position where you can do some simulated trading and practice some of the stuff without risking real money, and try the strategy out. I think you're going to find out in a short amount of time that it's pretty easy. Doesn't take a lot of maintaining. It's definitely not going to be a get rich quick. It is a get rich very slow, but nonetheless, it does bring in money month after month after month. You guys have a fantastic day.